Good morning. Welcome to Almus Market Morning. Heightened nervousness ahead of Fed meet and intensifying geopolitical developments have pushed global stocks sharply lower yesterday. But the US stock investors found in yesterday's steep sell-off a bargain too difficult to resist, and that's how all three major indices recover from their near 3% loss initially to end in marginal positive territory. In fact, S&P 500's 4.3% swing up is reminiscent of its March 2020 performance. A near 9% loss for the S&P 500 and 20% decline in Nasdaq from their respective record highs could be seen as overdone in short term, at least, notwithstanding a hawkish Fed. After all, the economy is still doing well in the US, and the intention of authorities would be to avoid a hard landing. And the recent extreme volatility in the financial markets would be out of their comfort zone. Expect some calmness in markets ahead of Fed meet and take further cues from Powell. As for the rupee, in yesterday's session, there was a serious attempt to break the recently formed resistance at 74.70 without success, as sellers were found aplenty and reports emerged of more overseas fundraising by Indian corporate. Rupee's resilience, along with other EMs in the face of ongoing market turbulence, is a telling commentary on investor confidence in these high growth economies. As oil prices eased nearly 5% from their highs, and it is difficult to see USD/INR building further momentum to the upside unless a very large outflow is seen. As we head into a midweek break, Indian markets, including rupee, could take a pause from the recent sell-off, awaiting Fed decision statement tomorrow, where I do not rule out a surprise either way, which depends on Fed's updated reading on economy and inflation. The expectations range wide from announcing a hike tomorrow itself or completing the taper right away to the other extreme of mellowing down rate expectations, which have gone to the skies. Thank you. Have a nice day.
JK, I think this week is all about Powell and Putin. Markets are well aware about Powell, what Powell can do, but Putin is holding cards in his sleeves, and that would be very important to determine the course ahead. Volatilities are back in equity markets. Just to quote numbers, Nasdaq closed in positive area, up by 0.8% after an intraday fall of around 3.5%. That's amazing. US short-term markets have started pricing in 100 basis rate hike in the current calendar year. It would be on Powell whether he would use this opportunity to align markets with the inflation story which is going around. It's a great opportunity for Powell. Looking at the risk aversion theme, there was continuous buying interest in 10-year USD yields yesterday. 10-year benchmark yield saw a low of 1.70% before rebounding back to 1.77%. Crude oil prices fell initially along with equity indices and recovered back now. Brent and WTI oil trading at 83.80 and 87% respectively. Indian 10-year GSEC yield closed at 665, higher by 4 basis points from a Friday close. Now market would be looking at a Powell, Nirmala Sitharaman, and what Putin can do. Have a great week ahead. I just want to highlight that tomorrow is Indian market would be closed. Happy Republic Day to all of you. Thank you.